Good evening, everyone. Me again, SK, for our usual weekly market outlook. Alright, now let's get straight away. We are looking at this particular week. We are talking about week which is July week 2, which is from July 4th to July 8th, which is Friday. Now, July 4th was an Independence Day holiday in US, so market was not open. So our trading days will be from July 5th up to July 8th. Now, as usual, we are going to look at market through our SP 500, which reflects about the top 500 companies in US. So then we will be looking at the chart first. So from there on, we will be looking at all the other details. All right. So now, last week I gave my weekly market outlook through a live video. You saw how about me plotting up my support and resistance, about how I plotted up the trading range and such. And now we are going to look back at the same chart using the same line, same support and resistance that we actually plotted last week through my live video. We are after the second week after the Brexit. Alright, the Brexit took place 2 weeks ago on Thursday, and results were out on Friday. So now what actually took place? As I mentioned during the live video last week, I was talking about the market actually taking some weakness starting at the week. Now that's exactly what took place at the beginning of the week, where on Monday there was slight weakness. There were further sell-off after the Brexit huge sell-off, but what took place after that was really amazing. Now, I was expecting that the market to push up back, but the speed at which the market went up back was indeed crazy. It was really crazy for the market to push all the way back to Brexit level. Alright, now the rally was really crazy. It went up all the way to pre-Brexit level. So before we go into the details of the rally, before we go into the details of post-Brexit, let's get into our usual method of trying to look out what will be the trend right now, what is the support and resistance. Has anything changed after the big rally last week? Now, if you go back to the chart SPX, which is what we are seeing right now, the trading range remains same. Alright, the trend is still sideways since 2014. I have mentioned this again and again. Even I am getting bored of saying the same thing again and again. But hey, that's market, right? Nothing has changed. We are still in the sideways. We are still in the box trading. Alright, our range is still all the way from around 1870 to roughly around 1880 to all the way to 2110 over here, which is our resistance. Alright, and further up there, which is our all-time high, which is roughly around 2130. So over here, our support and resistance remains the same as previous weeks. Nothing much has changed. So if we could see here, our first resistance 2110, then followed by 2128, which is the all-time high. Then support is 2043 to 2045. Then the next support, the round number, the psychological number, 2000 and 1870. Now this is what we actually plotted during our live video last week, and just take a look on what are the other things that has changed so far. Now, as the trend or the trading range has not changed, support has not changed, resistance has not changed, it is important for us to look at it right now in terms of the candlestick pattern. Now, what we saw on a Friday, on the week of Brexit, we saw a major sell-off over here, right? Then on the next week on Monday, we saw a sell-off again as well. That is the week or the tail that you all are seeing here right now. This is the further sell-off that took place last week Monday. After that, every single day we almost rallied about 30 to 40 points on daily basis. Tuesday, Wednesday, Thursday and Friday was a small push up as well. Now, one of the main reason why I do think that this market rally took place after the Brexit was this. We were in the last week of June, which is actually the second quarter of the year. So what basically done by fund managers is that they actually update their returns, their funds returns every quarterly. So when it came to June, after the sell-off, they need to clear up their positions so that they will be able to show good results for the quarter in their account or in the fund that they have managing. Now this is one of the main reasons that this rally could have taken place, because all these fund managers ran up trying to cover all their positions, especially those short covering actions. So when short covering actions takes place, they kept buying on, and that is one of the reasons why the market rally could have happened. All right, this is what I feel, because the rally that took place, it was so fast, and all of a sudden there was no fear at all in the market. This is pretty weird, and I do not think that the fear has gone from the market. It was all about fund managers trying to cover their positions before the next the next sell-off. So that is why I think that this rally is something that we're supposed to be suspicious of. But anyway, this market rally was really crazy. So let's see what we can expect for this coming week. Now, if we were to see it clearly, I mentioned few times that 2045 is our support. All right. So this support could be playing a very crucial role right now, because if you could see, after the Brexit took place, the market sold off and actually stopped roughly around 2045 as well. Then when the next week the market broke all the way to 2000, which is again another support, the buyers came in, the fund managers came in, they pushed up all the way up beyond 2045 and to close roughly around 2102 or 2103. Now, when this has happened, all right, what could we see is this: 2045 continue to be a very strong support, and any actions further, any sell-off, 2045 is the level that we have to watch out for. And again, we are also at 2110, so this is again our resistance. We are again and again at this level. The market has failed to break beyond this level almost 3 to 4 times. All right, you could see it over here once, then it came back all the way here, failed to break. It came back all the way here, failed to break. Tried to break over here as well, failed to break, and now we are again here for the 4th or the 5th time. Now this could be very, very crucial. I'm still suspicious of this rally, but any break above 2110 after this could bring us all the way up to 2130, which is our all-time high. But if there's any breakdown or any sell-off, 2045 will continue to be the point that we have to watch out. Alright, now let's just go slightly in detail. Let's just look at the daily chart. So if we go to daily chart and look at it, we can see over here that how the market rally took place. Pump. And on Friday, which was the 1st July, we saw a slight push up before reaching our resistance level of roughly around 2110 before the market tried to move down back. So we had a small candle over here, which shows that the buying interest has reduced because of all the major movements previous 3 days. Now, what can we expect for this coming week? Now, based on this, what I'm seeing is, let's just go back to our weekly chart. Based on this movement, for this coming week, I'm expecting a flat to downward biased market. Now, it could be, I'm more biased towards a flat market, but again, as I mentioned earlier, it could be flat or mostly towards downwards. But even when it's downwards, it could be a controlled downwards. At most, I'm looking at a 10 to 20 points downward movements. But end of the day, the net movement for the week could be a flat week again. All right, so that is my call for this week. We are looking at a pretty flat week. I don't think there will be major movements. Even if there's any drastic movement, I still believe it will be pretty much a controlled movement. Alright, so again, I'm looking at a flat week for this week. So nothing much has changed in our trading range, in our support, in our resistance. If we are looking at the moving averages, look at this: 20 days, 50 days, 100 days, all are supporting the market right now. Alright, that's basically how strong right now the bullishness in the market, because of the rally last week. But again, I'm still calling for the market to close flat for the week. And remember, this Friday is our non-farm payroll. It's a huge day. We are expecting huge numbers. Our estimation is about 138,000 new jobs were added. So that is a very big news that we have to look for. Now, one of the main thing that I would like to mention this week are the warning signals that are being appearing in the market. Now, let me just emphasize one after another. First, if we look at this weekly chart, we have went through a rally, but just take a look on what we are looking at, the MACD histogram. The MACD histogram, when we failed to break above 2110, we saw a MACD at this level, the histogram, right? Then the next time it went to 2110, the MACD histogram were here. So it's slightly lower, it's going lower. You can see obviously clearly that despite the market reaching the same level again and again, 2110, but the histogram is moving downwards. We call this as bearish divergence. This bearish divergence could provide an early signal that there could be a sell-off that is coming up very soon. Again, these are technical indicators. They are not 100% foolproof, but there could be a warning signal that we could take in before taking any trades into our portfolio. This could serve as an early warning signal. Now, so we have seen our first warning signal, which is this bearish divergence in our SPX weekly chart. Now we have seen the bearish divergence in SPX. Let me go through some of the other warning signals that I am looking at right now. The first thing is this: when we go into gold, more often gold is considered as the safe haven for investors. That means when they consider equity market to be risky, then they will actually switch their funds from the equity back to gold, because they are always considered a safe haven. Now, if you could see over here, yes, the market rallied, but people might be thinking there's no more fear in the market. But if you could look at gold, this yellow box has been gold's trading support all this while. All right, when you touch this point, it goes up. Touch this point, it goes up. But at the same time, it also served as resistance. If you could see here, it touched here, it went down. It touched here, went down, and touched here, went down. But recently, last week, 2 weeks ago, we have actually broke through the resistance. We have broke through this long-term resistance, or 2 weeks back, and last week the trend continued to move up. Now, if we were to think about it, if there's no fear in the market, why is that fund managers or people are moving their funds from equity to gold? There must be something that's brewing behind that is causing investors to feel uncomfortable to continue keeping their money in the equity market. Now, that is the second warning signal. The gold has done a breakout with a good volume, so we might see gold continue to move up. So again, this could be a warning signal for our equity market. So first warning signal we have seen, which is the bearish divergence in the MACD. The second is the breakout in terms of the gold price. Now the third point that I would like to share with you all is the bond market. So if you were to look at the bond market is also another place where investors actually switch their fund to bond whenever they feel that the equity market is risky, because bond market are considered to be a safe haven as well. It's pretty much safe because it is a government bond, so it's pretty much secure. But if you to look at it right now, 10-year bond, US government bond, for 10-year US government bond, we are looking at a very, very low yield right now. So if you could see this, we are talking about a pretty low yield. It is almost a 5-year low yield right now. When it comes to bond, it's pretty easy. This is how we should see it. When the yield is low, that means the bond price is high. So when the yield is low, the bond price is high. So which means fund managers, investors are flocking into bonds to buy up bond, thus pushing the price to all-time high. And when the price moves up, the yield goes down. So this is again another warning signal in the market. If equity is really bullish, bonds price will actually be going down. But right now over here, the bond price is actually moving up, which means the yield is going down. So people are actually moving their funds all the way from equity to bond. So this could also serve as another warning signal for us when it comes to equity market. Alright, so that is about bond. We are looking at an all-time low yield right now. For 10-year bond, we are looking at a 5-year low yield. And for 30 years bond, we are actually looking at an all-time low yield right now. This low yield should mean something in the market. What is it? We are not clear yet, but what is it actually causing all this? but sooner or later we will know what has caused people or the investors to switch their funds from the equity market to bond, which is considered as a safe haven. So we have seen the third reason. So that is the pretty much the warning signal that I have for y'all right now. The fourth reason could be also because of US dollar. So if you are looking at this chart right now, if you could see the red line and the blue line, that is the channel movement that US dollar was going through. So it was all downward, which I actually shared 2 weeks back as well. So each time it touches this blue line, the market moves, US dollar value moves up. But whenever it touches the red line, it starts moving down again. But after the Brexit, the US dollar actually pushed up all the way, and it has actually maintained the gain so far, and it's actually broken the resistance, the channel resistance right now. So again, signals are here. It is not really very clear about where the US dollar is going to move up right now, because basically it has broken through the resistance, the channel resistance, but at the same time it is actually pretty much caught at this level right now. It has failed to move beyond the level of 96.5 2 times in a row, or 2 weeks in a row. So it's very important where does the US dollar goes next, because remember, as I'll always mention, right now in the current market condition where there is almost zero growth, there was no real growth in the market. If US dollar continue to move up, it does not reflect well for the US stock market. Alright, now, so we have seen clearly 4 different signals that giving us some kind of warnings in the market right now when it comes to investing in equity market. First, we have seen the bearish divergence. We have seen how gold has done a breakout recently. We have also seen on how the bond yields are at a historically low level, and we have also seen on how US dollar has broken through its resistance, and right now at the decision point on whether it should actually go up further or continue moving down. Alright, any movement higher in US dollar could actually mean a bad news for all the equity market. Alright, so that's what I would like to share with you all today. So this week we have quite a number of events taking place. So non-farm payroll is another one that you should also be taking into consideration. As I mentioned, actually I have certain doubts about the estimation this time around, because the last non-farm payroll we only had 38,000 new jobs added, and this time they are expecting about 138,000. That is almost about 400 to 500% difference. I'm just wondering how is that in 1 month they could have added about 400 to 500% over jobs. So I'm still skeptical about the 138,000 number estimation for the non-farm payroll. Any further disappointment in the non-farm payroll could be actually bad news for the market as well, stock market again as well. Alright, just an added information, previously whenever the estimation moves, the estimation is very far from the actual numbers, those are the time when the market actually starts selling off. Alright, but again, that is just based on historical movement, historical estimation. So again, 138,000 is the number to watch out for the non-farm payroll. I'm very skeptical about the number, so let's just wait till Friday and see what takes place for this week. So be careful over there in the market. There's a lot of warning signal. It doesn't mean that there's no place to invest. There's a lot of place to invest. There's a lot of huge opportunities in the market to make money off. A lot of profits out there waiting for us to grab. So as usual, stay informed, stay invested. Hope you all have a profitable week this week, and I'll see you all again next week. Thank you, and thank you. Alright, see you guys.